Good morning. It is Saturday, October 29, 2022. It's 11:21 a.m. on the East Coast. And I just want to basically run through some monthly candlestick charts, some key charts out there across sectors. Um, Today's the 29th, so Monday's the 31st. That's the last day of October. I'm guessing that most of these candlesticks will stay roughly the same, or at least close enough for our purposes at Monday's close. Could be wrong on that. Who knows? Because anything can happen. But anyway, let's get into it. Let's take a look at some of these candlesticks. So the SPY, the S&P 500, has come down at its October low, which was about 3,500 on the cash S&P. It almost touched its 50-month moving average. So obviously, this moving average is a very strong indication of the longer term trend. And one would assume that around that 3,500 level, 3,450, if you want to get even more granular, is going to be a pretty important area of support. So we went down there, we found some buyers, and the index has rallied more than 10% from that low earlier this month. And the S&P is actually heading for a almost 9% gain for the month of October. So that's really noteworthy. And it's just interesting where this is happening. So this is at the lows. The S&P was down more than 25% year to date. So now that loss has been cut significantly, now less than 20% drawdown year to date for the major stock index in the US. And you can see the monthly relative strength has also moved slightly back above the median line at 50. And if I keep going through these charts, there's a lot of sectors like the financials that also touched the 50-month. And you look to the left on the chart, oh, look, that was key resistance from January 2020. So we've come back to test that level, and now we found support there. So this is just TA 101, that a lot of stocks and sectors are bouncing off of pretty clean, clear long-term support levels. Amazon reported they missed on revenues. I think they lowered guidance. And look to the left. This was key resistance from 2018, 2019, and 2020. We've come back to test it, and a little lift Friday afternoon above the 100 level. It was down for the week, down for the month for sure, but finding some support around 100. Oil services, one of the strongest sectors in the entire market, up 37% for the month of October. So you usually don't see this in a bear market. This kind of incredible performance from these big oil services stocks. Freeport McMoran, big copper gold miner, up 18.44% for the month of October. So this is a weird market because the consensus has become that this is a bear market. And we even have some news headlines that some Bloomberg economists are forecasting a 100% chance of a recession in the US in 2023. So, put it all together, sentiment is pretty god awful. It's pretty awful. Bank of America bull bear, index at max bearish for 6 consecutive weeks. So put it all together, it's a very bleak backdrop. But when you look at these charts, what you have is a picture of a market that appears to be finding some strong support in October and starting to turn up. And it feels like the stage is set for some more upside into the end of the year. Now, of course, strong opinions, weekly held, but I'm just reading the charts. I'm looking at where we're at. Copper, look at this, 50-month moving average, bottoming tails, narrowing range around the 350 level. And then look to the left. 350 was resistance, 2017, 2018. And now it's acting as support. And there's a lot of sectors, a lot of markets that appear poised for a turn up into year end, just as the sentiment backdrop is bleak. A lot of people are really pessimistic. Most people are overweight cash. Friday we did have a big rally, but I'm not sure that was enough to bring a whole lot of cash off the sidelines. We probably need to see quite a bit more upside to start to see people get bullish again. Tesla, this is interesting because Tesla found support at 200. So just like Amazon found support at 100, Tesla found some support at 200 last week. But bigger picture, this is monthly charts. This is constructing a pretty powerful chart pattern top. Maybe it needs to spend a little more time gyrating around here in the low 200s to suck in some more longs who think the bottom is in. But notice how many times this 200 area has been tested in the last couple of years. My inclination is that the next time this level gets tested in the next few months, if it does, it's probably going to go through it and probably come down to this blue line, the 50-month, down in the 150s. So turning to gold. So gold had a down day on Friday. It's kind of an ugly day for gold, the metal, on Friday. And we broke down through 1650. That's not what we wanted to see. And with one day left in the month, unless gold has a really good day on Monday, gold is going to have its seventh consecutive lower monthly close. So 7 red monthly candlesticks in a row. That is the longest streak in a very long time. Even if you go back to 2013, there was a little green month in the middle of this. Okay, so let's go back and just take a look at that. Yeah, so obviously this was a big sell-off, but it didn't do 7 in a row. And here we're doing 7 in a row. Obviously it's not good, especially if we close under 1650. It's not good. But at the same time, this area is a natural spot around 1650 to find support and stage a counter trend rally into year end. The way the GDX is trading, outperforming gold significantly in October, lends to the idea that we could be getting ready for a year-end rally in gold and miners. Now, I'm not holding my breath for any massive rally in the next 2 months in gold, but could it get back to 1750, maybe even 1770s? Yes. And that would be sort of my upside, like 1775, maybe 1800. That would be like a best case. But basically, if gold can rally back above 1700 into year end, that would be very positive for the gold miners. And the gold miners are showing us just by this monthly candlestick pattern that they're wanting to bottom. September, the GDX printed a spinning top, a bullish spinning top, a green spinning top. That is a sign of indecision, and also very often can mark a bottom in a chart. Well, let's see what Monday brings, but right now we're up 2.5% for the month of October. So that would be confirmation that September was the low. And I think that sets the stage for a rally into year end. possibly up to the $28, $29 area in the GDX. Not sure we get quite as high as 30. Again, anything can happen, but my base case is sort of 28 to 29 will be the cap to any year-end rally in the GDX. And then Agnico AEM reported good earnings last week. So that's a refreshing change to see a senior gold producer actually beat estimates and keep costs down. The all-in cost for AEM is about $1,100 an ounce of gold. And that's still a very healthy, more than $500 an ounce margin at these gold prices. Imagine if gold does go back to 1,800. AEM is going to be a cash cow. Look at how many times the $46 level has been tested from both above and underneath in 2022, at least half a dozen times. This is setting up for a bottom to be confirmed and a rally, maybe a 10% rally back to 49 or 50 in November. I like this chart a lot, and I may pick up some $46 November calls early next week. So that's it for my quick monthly candlestick analysis, sort of my thoughts on where charts are at. Bigger picture heading into next week. Have a great weekend.